Welcome to Markets Now. I'm Michelle Rook along with Tom Fitzmeyer with Summit Commodity Brokerage, and we're seeing higher prices in everything but feeder cattle futures. And right now, let's talk about the grain trade, Tom, because soybeans have been kind of leading the charge here. Is that weather, report positioning? What's going on in that market here today?
Well, I think a lot of this is just residual buying from that acreage number on Friday. I think it has everybody believing that the number tomorrow and that report is going to be friendly because of the acreage adjustment. Well, and to some small extent to the stocks number too. So we're looking at a fairly low carryout, possibly 200 or less in the old crop, and that's got everybody a little excited now. We've had a lot of buying in soybeans and a lot of selling in corn since that came out. So they've got that spread kind of stretched the other way. So yeah, if the bean number isn't quite as friendly and the corn number isn't as bearish as they're expecting it to, you could see that spread go a little bit the other way after that report tomorrow. So I'd be a little cautious about how I wanted to be positioned going into that tomorrow morning.
You bet. As far as the corn, though, the big debate is, will USDA make any adjustments to yield? And if they don't, man, this could be a really bearish report. But what is USDA's tendency? They don't change it very often, do they?
They don't. They're very reluctant to do so. Now, our crop condition ratings are a little bit lower. If that's one of the things I assume that they look at, so that could be a factor. If you look at the average trade guesses, the highest of the trade estimates is a bushel and a half per acre yield drop. The trade's looking for a 3.4 bushel per acre drop in the yield. So there's some of that, like I said, some of that's already incorporated into prices. I mean, we know they're going to make an adjustment for stocks. We know they're going to make an adjustment for acreage. They're probably going to adjust export demand for corn down a little bit. Probably won't change ethanol all that much. So are they going to make other demand adjustments because of this acreage number? That's a bit of an unknown. Probably not much. Again, you've got a lot of I don't know, the potential for bearishness in the corn market, I'd say, if the USDA doesn't come out and change the yield very much.
Yeah, and that's going to be a big debate because when you have the drought monitor still showing 67% of the corn acres in drought, it's hard to not think that this yield is getting smaller, even with the improvement that we saw this week in crop ratings.
Well, you've got two problems with the yield. Number one, the trade's trying to figure out what the USDA is going to say tomorrow. That's one
True.
number. The other number is what's the actual yield going to be, which could be a completely different number. So you in the short run, you're trading what the USDA is going to say. In the longer term, you're trading what the actual yield could be.
Tom, the other thing that may be moving the bean market here is that we've been hearing of perhaps some China purchases. Sometimes where there's smoke, there's fire. There's sometimes these rumors can move the market more than anything.
Yeah, I think that's mostly new crop soybeans. Mostly what I've heard. I don't know that there's all that much interest in the old crop. That we only have 8 weeks left in the marketing year. I guess I'd be surprised if they bought much old crop soybeans, but certainly having them step in and buy some new crop wouldn't be a big surprise. The amount that they've bought so far relative to what they certainly relative to what they had a year ago is substantially less. So they could do some decent buying here, and that would certainly be a positive for new crop beans, or at least makes November beans less bearish, I guess you'd say.
Yeah, let's hope so. Okay, the wheat market. Is wheat following corn and soybeans, or are we trading crop concerns there because harvest pace was behind and spring wheat crop ratings dropped?
Well, the spring wheat certainly has its own basic positive fundamentals, so the strength there isn't a surprise. I think the Chicago wheat's probably following corn as much as anything. Yeah, I mean, it's got its own positive fundamentals, but maybe not quite as positive as corn is. So I guess in my mind, it's just a follower right now, anyway.
Gotcha. Cattle market. Let's talk about that one. Live cattle futures have been quite resilient as well. The cash trade was resilient. The weighted average was actually up a little bit last week. What are you expecting there this week? And will live cattle be able to kind of continue to base here?
Yeah, I think the supply side of the cattle trade continues to be supportive. We continue to at least chop and work our way higher with little corrections. You and I were talking before the broadcast here. The April 24 contract made new highs yesterday. So that supply situation just continues to really support the cattle market. There's been concerns, and I've had them for 6 to a year about whether demand would hold up. You've had a pretty good drop in pork, pretty good drop in poultry, and yet beef demand continues to hang right in there. There's some concern about the economy being soft, but there's a vast majority of the people are working, have jobs, and apparently are committed to eating well. So I'm amazed at beef demand ability to hang in there, and it looks like it's going to continue to. So you combine that with supply problems, and there's not a lot of downside in the live cattle market, at least for a while.
Yeah, it seems like just about every break gets kind of bought here, doesn't it?
Right, exactly.
Yeah, absolutely. We have had the pullback in corn, which has certainly helped the feeder market. That's going to maybe provide a little more incentive to put some more of those feeders into the feedlots here, isn't it?
I've seen some break even show that you can buy feeders here, hedge them off in the February contract, and make some pretty decent money. So I think that's going to be, especially if we have cheaper corn, which it looks like we're probably going to have. I think that feeder market should be very well supported and probably has some more upside potential to it.
Gotcha. What about this hog market? The August contract got above the $100 mark, I think up to a little over 102. And then we kind of set back here. It looked like maybe a chart reversal, but the cash market continues to be higher even at noon today, and cutouts have continued to be higher. So, will that continue to keep pushing that market?
I think so. I think the demand for pork's quite good. The numbers there are probably neutral, but good demand. Certainly, pork substantially cheaper than beef is. Competes fairly well with the poultry industry. So, yeah, I don't. I mean, you're going to have corrections and pullbacks and all that, like you always do in the pork industry. But I'm guessing or pork price, you're going to see that well supported. I would think on any breaks.
All right. Thanks for joining us. Tom Fitzgerald with Summit Commodity Brokerage. That's Markets Now.